Namaste everyone, this is Rupi Raja and today I will do the NFO review for Motilal Oswal Service Fund. Talking about this NFO, NFO stands for New Fund Offering, and a new fund offer is the first time an investment firm offers a new mutual fund to its investors. It is just like an initial public offering, but it is for mutual funds. Talking about what are mutual funds, a mutual fund is a financial vehicle that pools money from many investors to invest in a diversified portfolio of securities such as stocks, bonds, and other assets. Investors buy net asset value units in the mutual funds, becoming partial owners of all its holdings, and a professional fund manager manages that portfolio on your behalf, and an expense ratio is charged for it. Talking about Motilal Oswal Service Fund, the launch date for this NFO is 20th May 2025 and the end date is 3rd June 2025. There is an exit load of 1% if you try to redeem your funds before 90 days, and the allotment date for the units are 9th June 2025. The fund aims to outperform the total returns of the Nifty Services Total Sector Index, and it invests in equity and equity related instruments of service related industries such as informational technology, financial services like NBFCs, banks, insurance and wealth management, health, hospitality and tourism sector, retail and e-commerce sector, logistics and transportation sector, and media and entertainment sector. So there is no sector concentration in this mutual fund. The scheme will be managed by Ajay Khandelwal, Bhalachandra Shinde, Atul Mehra, Rakesh Shetty and Sunil Sawant. So all these fund managers have been good and they have associated with a old mutual fund house which is Motilal Oswal. Talking about the return expectation, the 10-year CAGR for this mutual fund can be between 12 to 20%. And since it is a equity fund, there is a taxation of short-term capital gains tax of 20% and long-term capital gains tax of 12.5% on gains above 1.25 lakh annually. Currently, the Nifty Services Index is fairly valued and makes a good opportunity for a retail investor to start a SIP or a lump sum in this fund with this benchmark. Talking about my opinion, if I want to create wealth in the long term, I will invest in this NFO. But since I already have a good idea of which companies and in which sectors have pricing power and which companies have focus on good service quality to its customers, I will directly buy those stocks in my demat account. If you have difficulty in that, you can directly see the holdings of these services funds. Every month, the mutual fund brings out his fact sheet to its investors, and in that, they tell you how much portfolio have been allocated to which stocks. So, in that case, you can get an idea about that if there is a service fund, and you can see overall directly that what mutual funds are buying which service sector stocks, and if you can know that they are buying this stock, then you can directly buy those stocks in your demat account. But you should always be remember and careful about the fact that the stock you are buying is not heavily overvalued. Every month, the mutual fund house brings out fact sheets for all its mutual funds. So there are many mutual fund house which have their own services fund. So if you can go over their fact sheet and you can see what all stocks they have in the portfolio, based on that you can get an idea that which stocks are good in the service sector, and you can directly buy them in your demat account. But you should be careful that the stock you're buying should not be heavily overvalued. If you're a passive investor, then it is better to invest in Nifty Next 50 index fund, because this NFO or this mutual fund is a thematic and a highly volatile fund. Talking about suitability for different investor types, if you're a conservative investor, then yes, you can apply to this NFO, but you have to be very brave. If you're a balanced investor and have good allocation to stocks and bonds, then you can try to start a SIP or lump sum in this NFO, but you should keep in mind that your investment horizon should be more than 5 years. If you're an aggressive investor, then you can start a lump sum or SIP in this NFO mutual fund. If you're a goal oriented investor, then you should avoid this NFO because it is too risky for you. If you're a passive investor, then I would suggest that you should try to go for active funds for high returns. If you're a passive investor, then you should skip going for index fund, and I would suggest you to try active mutual funds for high returns. If your time horizon is more than 5 years, then you can also start a SIP or a lump sum in this mutual fund. If you're an active investor or you're a young investor, then yes, you should start a SIP in this mutual fund for 5 years. If you're a diversified investor and you have allocated good percentage of your portfolio to different asset classes like gold, large cap, mid cap, small cap, and real estate, then you can ignore this NFO. If you're a speculative investor and you want to invest or trade for the short term, you should skip this NFO because this scheme will not give you bumper returns, and neither this index to which this mutual fund house is benchmark is highly undervalued. It is fairly valued, so it will not give you high returns. If you want to read about the scheme details for this mutual fund, I have attached them in the description of this video. So that's a wrap on today's NFO deep dive. We have crunched the numbers, dissected the story, and now it's your turn. What do you think? Drop your thoughts below, hit that subscribe button, and let's keep decoding the market together. If you have any queries related to mutual fund or stock advice, you can just type your questions in detail in the comment section, and I will try to answer them in the comment section itself. If your query is very detailed, then I will make a video responding to my subscribers query. As of now, this will be free of cost. Before ending the video, I would like to give the disclaimer that all the things told in this video are not financial advice. I have included this disclaimer that this is not financial advice disclaimer to clarify that my content is for informational and educational purposes only. While I share my analysis and perspective on stocks, I am not a certified financial advisor and everyone's financial situation is unique. The disclaimer ensures you understand that any investment decision should be based on your own research or guidance from a licensed professional. As equity markets carry risk, it's all about keeping things transparent and encourage responsible investing. Hope you like this NFO review. Thank you. This is Rupi Raja.